Hey everyone, I'm Charting Man Dan with the chart, guys. Thanks for hitting like and subscribe. It's July 4th. Happy holidays. We're going to check in on the market in the shortened week with the bulls having been in absolute full control over the last couple of weeks. Where do we stand now? Is it time to get cautious? Going to talk in depth with a trade review about BMNR, how I go aggressive in an ultra bullish environment, and how it has led to leveling up in my trading career. We're going to start with the broader market and we'll end on that. All right, so the S&P 500, pretty much 2 weeks in a row of straight up. The red we're seeing right now is, again, on our holiday here, Friday, and potentially a little bit of a sell the news reaction to Trump's big, beautiful bill passing the House. And so we're looking at the possibility. Obviously, things are going to change by the time we head into Monday's open, but I'll be watching, can bears confirm a 4-hour downtrend into daily consolidation? We know daily consolidation is inevitable. Again, straight up. So S&P 500 had great rotation we're going to talk about in just a moment, but we just went straight up 6%, and daily consolidation is inevitable. So what we're looking for is what is the response to first hourly oversold conditions when we see it, and we're starting to approach it. We can see it hasn't happened since our last low down there when we were still dealing with the Iran headlines, and so we'll see the reaction now, because earlier this week, we saw the NASDAQ and semiconductors sell off more significantly, and they hit hourly oversold and set daily higher lows, which is exactly what bulls want to see. What the bulls also wanted to see, probably talked about it in last week's video, is what happens when semiconductors see the inevitable daily consolidation. And the answer was, we saw significant rotation the first day of the quarter with XLV and XLP, staples and healthcare. And that's why SPY, the S&P 500, was able to not consolidate while semiconductors consolidated fairly fast and hard. And again, just a visual of that, semiconductors had 4 gap ups in a row. We know consolidation's coming. We dipped down hard. We had hourly oversold, and that led to back burner. It dipped a bit deeper into hourly oversold, but again, daily higher low, bull flag confirmed, new all-time highs, and the daily uptrend remains our guide. And that's the way that I've stayed bullish the last 2+ months. Because again, just keeping it as simple as possible. I could be looking for reasons to be bearish. I could be looking at fundamentals. I could be looking at, maybe there's RSI divergence somewhere. But if you boil it down to the most basic aspect of markets and the most important, it's price level trends. And when I look at this daily chart for the S&P 500 and the NASDAQ, when did things turn bullish? When we broke the bounce high and kept back tested, held the previous resistance as support, and kept going. And so at this point in time, that is now 2 months and 1 week of price action where there literally hasn't been anything even close to bears taking over. Okay, big pullback, confirm the daily downtrend, and we know things will have shifted. Couldn't do it, we go higher. All the bear headlines with all the war stuff. We can't go down at all, we're going higher. So again, that's been my mindset. And the key to it is not fearing the drawdown. I'm going to stay bullish until I'm told otherwise. I won't be told at the top. It's not going to be a top tick. I'm going to know the shift is taking place after we've already pulled back a few percent from the high. But by not constantly looking for the top, I'm allowed to enjoy the benefits of bullish continuation. So, I'm watching this seasonality period, the last 3 trading days of June into the first, I think it's 9 trading days of July. The NASDAQ is green 31 of the last 40 years for an average of 2.5%. I don't know why that's burned into my head now, but it is. And at this point in time, the NASDAQ has gone up 2.75% in that window, and we have a little bit further in that window to go. But we're going to look for an S&P 500 daily higher low. And again, because we're so strong on so many time frames, when we lose the daily uptrend, guess what? We're going to scout a weekly higher low. And then guess what? We're going to scout a monthly higher low. There's an immense amount of space for a monthly higher low to be the result of next consolidation. So as I talk about my conveyor belt of trades, I've got trades where I'm looking for hourly higher lows, maybe not in this moment anymore, but I've got names I'm looking for daily higher lows on, the S&P 500 being one of them. Then I've got names I'm looking for weekly higher lows on. I've got some uranium names that fit that criteria. We've got quantum names. So it's just one time frame at a time until we see a significant shift. And the first shift that's going to get my attention will be confirming a daily downtrend. So what would the S&P 500 have to do? We would have to pull back for days or a significant amount very quickly. We would have to fail the high and then confirm that daily downtrend. And again, we haven't really seen a clear example of that in over 2 months. So I see people trying to pick tops on social media, and it's just not the way to make money in markets. NASDAQ, again, so 4 hour, trying to hold EMA 12. Same, everything I said. The only difference is we at least have a short-term support level nearby. So losing that could be an initial, okay, things are shifting. But again, I need the confirmed downtrend because, just like back here, all right, we set a little daily support level. We're trying for continuation. We lose it, but never confirmed a downtrend in any meaningful way. So NASDAQ still strong. Again, weekly uptrends, our guy, daily uptrends, then weekly uptrends, then monthly uptrends. And we'll keep an eye on that daily higher low level. It was the semiconductors that dragged it down. Again, just overextended, can't go straight up forever. So we pull back, hourly oversold into continuation. So we have a new support level. Keep it simple. If 270, 216 is support, the bulls have absolute complete control. We've been closing at or above the daily EMA 12. We close right there on it but pretty much riding daily EMA 12 for almost 2.5 months at this point. And that is our guide. Again, so here was the pullback. At one point in time, what day was it? On Tuesday? Yeah, so one point in time on Tuesday, semiconductors were down 2.4% that day. That's something. And the NASDAQ was down 1.27%. But at that same time, healthcare was on absolute fire, up 2% plus on the day at one point. And XLP, consumer staples, was on absolute fire, up 1.86% at one point on the day. So again, that's the rotation that the bulls want to see. And the next major question that I have this coming week, XLF, straight up, daily stair step, 6% with a higher low every single day for the last 8 days in a row. We know daily consolidation is inevitable here. It's a part of a strong, healthy uptrend. What do the other major sectors do when XLF sees daily consolidation? Best case for broader market bulls is semiconductors and big tech are strong when that is happening. But we'll see how it plays out. XLF ended up being a cup and handle. We've been talking about this for weeks. Again, the psychology of a significant pullback, you fail resistance, and then you bull flag. And early on, we were able to make the statement, as long as 49.40 holds, or let's adjust for the dividend, 49.57, as long as that holds, it's a bull flag. And so now we are confirming this cup and handle type of pattern. On Twitter, I made a post on Thursday about how this is the most cup and handles I've seen on daily and weekly timeframes confirmed in as long as I can remember. And I gave a bunch of other examples there. And we got another one to be watching in XLU. Utilities here. Again, it's not a picture. It's the difference between, there'd be some technical analysts who would argue with me, that's not a cup and handle. It's not a rounded enough bottom. For me, that's a difference of book smart and street smart. The most important aspects of the pattern are you have broken out, you form a top, you see a significant period of consolidation, you fail the top with a lower high, and then you bull flag, because the most important aspect of the pattern is you're building up some shorts, and you have people that are going to stop by the resistance break and bears that are going to stop by to cover their shorts on a resistance break. And so you're just building up pressure. And then, of course, the most important aspect aside from that is you don't have any previous price resistance nearby. So it's easy for the bulls to follow through. And that's what we have on a bunch of these patterns. So again, I'm not going to nitpick, well, the rounded bottom's not rounded enough. Okay, that's a personal opinion. It's exactly the 3 criteria that I just laid out. And so the simple statement on XLU is if 79.78 holds, it's a bull flag that will see new all-time highs. It's just a matter of time. I'll talk a bit more about stop buying that kind of resistance in a blue sky breakout in the day trading example at the end of this video. And again, XLP also churning under a very key resistance zone. So can XLP head to an all-time high, or are we going to fail this resistance and stay sideways? That's something we're watching as well. Tesla's had a lot of action. Again, it's just, the price action has relative weakness if Musk is tweeting involving Trump, and relative strength if he's not. But in the end, we're getting the most common scenario, or the most likely scenario, I should say, which is the 2-day equilibrium, which is what we were watching for. I longed Tesla fairly aggressively on Monday. Beautiful day. Tight, pressure built up, release that pressure straight up. And then I stopped out of my runner position on Wednesday, recognizing, okay, this just may be the lower high in an equilibrium because we failed the other resistance level. And so the lower high was set, and now we have a higher low. And so the higher low is down at 293.21. There was a great gap down bounce play there. I was playing that a bit on that day, whatever one it was, Wednesday maybe, Tuesday. Didn't hold the position into the delivery numbers because I don't feel like that coin flip gamble where my stops aren't going to be working in extended hours. But again, now we're looking for a 2-day lower high compared to 357.54, and it's entirely possible that this pattern tightens up into mid or later July. Bulls want a bit more follow through here. They want 320s plus to keep it tightening up to give them space above that 293 low. But I can say by looking at this pattern, Tesla will see volatility pick up. Tesla will likely see volatility shrink over the next week plus, and then it will see volatility pick up the second half of July. A headline can change that. You know, who knows what Musk could tweet about Trump with he's not a fan of the bill, and the bill just passed. But, you know, if it comes out that Musk is now starting a third party and he's all in that regard, I would expect that to have a bit of bearish overhang for Tesla because it just means continued battle. Healthcare. So healthcare, we were looking at this weekly inverse head and shoulders attempt, and it did confirm no follow through at this point. Again, it was a 1-day rotation to start the quarter. And there's no red flags. You know, we were extended to break that resistance. So what the bulls want to see is, you know, a daily higher low and then ideally some continuation. But UNH had a big bull break and then gave it back. Again, I've got exposure in UNH, but my break even's down around the low, 270. I'm just letting it play out. I'm going to hold this for 6 months, 3 years, or I'll stop out break even because that's what allowed for me to get, you know, Microsoft gains of 80% plus or whatever it was over a year and a half. And so that's my mindset for this name. And in the meantime, I'll grab some dividends. So the red flag here was potentially related to the bill with the complete turnaround. We had a great breakout. Again, that rotation day, it really thrived by getting to the highest level in a month plus. But 320s is stubborn. Are we adjusted for the dividend here? So, okay, if you don't adjust for the dividend, it's pretty much a double top at the bounce high. We got up to the 324s, and we broke it by less than 1%. So that's definitely an important zone to be keeping an eye on. It's still technically a daily uptrend. We got a support zone down in the 290s to be watching. That's just the channel that I care about. If we're not breaking and turning one of these zones into support or resistance, then nothing is changing on this chart. So it was nice to get, you know, some upside and some volatility, but here we are right back in the middle of this range and still sideways. So this is why I'm not really paying attention to this name at all, aside from, you know, checking in on it, but I'm not trading it. And I'm just letting it play out because otherwise I'd be wasting a whole bunch of time, which is an opportunity cost. Quantum names. So quantum names were showing relative weakness, but I kept saying, you know, I'm looking short quantum if the NASDAQ sees weakness. Well, we didn't see any NASDAQ weakness. So, you know, eventually you can only fight that current of the NASDAQ for so long. And now these bulls are benefiting. This, again, you know, this is a bull flag on the weekly. We double bottomed down at 36. We formed a little rounded bottom here, so it's attempting to be a bull flag from that move. And the daily uptrend is going to be our guide. We got higher low, higher low, higher low. And so we're just making our way back up towards that resistance zone right around 49 and keeping an eye on things as IONQ is, again, the sector leader. But you got QUBT back to testing its high. Again, after a quick weekly bull flag attempt, you got QBTS, which was the lead bear, started to look a little falling wedgy. Again, it was, I might have talked about that last video. I forget. I say so many things in so many different places. I forget what I say where. But bear break into a little bounce, bear break into a bounce. That's a big bounce. So again, you could look for a QBTS daily high or low next consolidation. Look at the weekly chart coming off all-time highs. There are no red flags there. EMA 12 hold, you know, that's digesting a very strong 100% plus breakout. No red flags here. So we'll see if the bulls can form another daily high or low. This actually reminds me of eBay. I've got a library of charts in my head. eBay, all-time high, back testing EMA 12, big daily bounce straight off the lows. We're scouting a daily high or low next consolidation. Can bulls confirm the daily uptrend? QBTS is that same setup. The other one is RGTI, laggard move, big 2 days here. Again, just building a base. So can't be short in quantum if the NASDAQ is strong, in my opinion. Uranium, CCJ. Again, I'm going to exit my swing position that I grabbed back here when we lose daily EMA 12. Why make trading complex. Why should I be looking at RSI divergence and little clues trying to find the secrets that nobody else is seeing? I'm long if daily EMA 12 is support. When it's lost, I'll exit at least half of my position and maybe the whole position. How much more simple can you make this? You can't. I cannot suggest enough. And we as newer traders, we want to make it complex, right? Because trading is very difficult, and we know that, and everybody's telling us how difficult it is. So we make these assumptions that I have to be digging deep and finding the things that nobody else is seeing. It's difficult because we have to rewire our brains in the way psychology and emotions work. That's why it's so difficult. It's not that I have to do difficult technical analysis. So now I've just been walking a stop up. I walked a stop up to here, and then to here, and now it's under here. So stop it. The low is 70.68. Stop at 69.99. We'll see if we get a new all-time high. I know weekly consolidation is very due here. The other names in the sector have been seeing weekly consolidation, SMR, OKLO. But again, these names are on my list. A weekly higher low is the most likely scenario as we approach a back test of previous resistance to try and hold it as support as weekly EMA 12 catches up. So I know that at some point over the coming weeks, I will be scouting a weekly higher low in SMR and OKLO. It's on my conveyor belt of trades. OKLO was a weekly cup and handle. Was talking about that June 9th. And on June 9th, there's your bull break. It was short-lived, but percentage-wise, certainly worth it. Again, just cup and handle. So we gave it back, but we're looking for a weekly higher low as we back test. Previous resistance as support. Daily downtrend is our guide while we are scouting for a weekly higher low. Maybe it's a 4-hour falling wedge trying to shape up like QBTS was. It's not very developed at this point, but I can draw some line. Yeah, that's good. That's a good one. That's a good one. If we pull back, yeah, I'm going to keep an eye on that this week. See this? These videos help me, right? I enjoy helping other people, but I'm doing prep for next week, live on the spot. Well, recorded on the spot, but it's live for me. So we'll keep an eye on those. I like OKLO a little bit better, but all right, commodities. Let's wrap it up here. We got a long second half of the video. Dollar is all bear. Daily downtrend, weekly downtrend. We're looking for a daily lower high to be the result of this bounce. Gold still looks good. Again, weekly. Keep it simple. Bulls are in control if weekly EMA 12 is support. Held it, almost lost it, held it again. Bulls are going to try and confirm a daily uptrend. If they do, again, it's essentially an equilibrium. It's not a picture-perfect one, but we got our high, low, lower, high, trying for a higher low in this tightening range. It'll be very clear when we lose weekly EMA 12, but bulls are fine until then. Silver still looks fine as well. Again, I sized down a little bit, and I don't regret it too much just because I've now been focusing elsewhere. I've got the profit I took in silver is in other places now. One of those being bull. We'll look at bull in just a moment. But that's a weekly bull flag. We're at 13-year highs or whatever. No red flags on silver whatsoever. Great back test and hold of the mid-35s. Held it here. Quick dip below. No acceptance. Held it again. Good sign. Bull. So bull was a laggard play. So I missed hood. And hood, I think, was a cup and handle. Yeah, I was talking about hood as a cup and handle back here. This quick little bull flag on the rejection. It was more of a grind up, not an explosion. But again, daily EMA 12 rider. You have nothing to worry about if that is support. And we just kept holding it. And then we got a significant leg up with news and tokenization and all that. So I'm looking at hood and saying, okay, I missed this. You know, I missed plenty of things. I'm not beating myself up about it. We will scout a weekly higher low eventually, obviously, with this much strength. But okay, I missed hood. How can I make money elsewhere? Well, bull is a recent IPO and a sector peer. And I see bull trying to form the balancing scales reversal. Look up chart guys balancing scales if you don't know what that is, but we're trading sideways as the scales start to shift from supply outweighing demand. Now we're evening out, and then the scales tilted in a big way for demand to outweigh supply. And the reason I was looking for this was because it's a double top to a penny, 11.75. And we're just churning right underneath it. And you break that level and it's go time. And we go straight up 30% plus from that resistance break. That was another one. I don't often, it's not a major priority for me to post setups in advance on Twitter, but this was one of them. And then, 7 people like it. It's like, oh, guys, I'm trying to feed you the play. Look for the break of 1175 as the go signal. So yeah, that was unfortunate. I was bummed to see not many people on that, but straight up took some profit. My break even now is down at, who knows what, tens, in the tens. And so my mindset, and we had dilution news after hours Thursday, so it's going to gap down on Monday. But we knew daily consolidation was inevitable. Thursday morning I said, if you don't plan on sitting through consolidation, you're taking profit here on this gap up after we've run 30%. But can hourly oversold, market daily higher low? We'll see. And again, my mindset in this market is get in positions and don't touch them. I'm kicking myself on PLTR because back when it was $7 or whatever, there's another cup and handle. Double top at all-time highs, bull flag, and go. But I was watching it build its base down at $6. I didn't know much about the company. Well, a lot of people are excited about this thing. Why don't I just buy 1,000 shares and just never sell it? It goes to zero and I lose $7,000, or I hold it for a long term. And obviously, that would have been the decision. So my mindset on so many plays is that just get risk-free. I don't need the cash as income right now in terms of trading profits. So get risk-free, set a break-even stop. Maybe bull is trading at $26 in 7 months. What do I know? So hoping, so many times you see an IPO get hyped, sell off, long-term bottom, basing out, Meta did it, and then it just goes back to all-time highs over the next couple of years. So that is my mindset on many swing trades, not all of them, but all right, I'm done talking? No. Oil, natural gas, real quick. Oh, we got a doozy this week. So I said I wanted a bear flag confirming with no follow through to be the setup that I like, and we didn't get it. So we have the weekly higher low is not set, inside bars still. If it breaks bull, we're gonna look for the equilibrium. We'll look for something like that. But not much else to say. Just watching these inside bars to see if the bulls can set the weekly higher low. Natural gas hasn't been doing much of anything. It's still all bear. Again, no interest. We're looking for a monthly higher low eventually. The bulls have not been able to do it. Not wasting my time on natural gas because anticipating that we're just going to tighten up long term now. That was the move. That's an example where I will take, that's counter a lot of long-term downtrends. And I played that move long. I will exit that bull position because it's counter trend. Well, bull is as well. It's just because it's a recent IPO that it's different for me. And UNHs as well. I guess that's a bad example. But expecting a monthly tightening range. All right, so it's Thursday, a few hours after the market closed. I'm fresh out of a sauna session where I was brainstorming. I'm gross, but inspiration struck. You can't manufacture Inspirato. And so we're going to record this while it's still fresh in my mind, because how I traded BMNR this week is essentially a micro version of every period of months where it's euphoria, where I level up in terms of significant gains and, changing the capital size that I'm trading with. So BMNR, Tom Lee, Ethereum, crypto, and a new name. That's all I need for the theme. We know the theme is crypto stocks. How do we know that? CEP, Jack Mallers is a well-known crypto figure. This is his Bitcoin treasury company or whatever, and it is new and exciting, and they talk about it on CNBC. That's key, right? The word's got to get out to the masses. Plus 377% in a week and a half. Then you have CRCL, IPO, new, stable coins, sexy, straight up 367% in 2 weeks. Then you get BMNR, and this one blows everything out of the water. It goes up in 4 days, 1,200% in 4 days. The most important thing, crypto, new, no price history, blue sky breakout essentially, and two of them had a known figurehead attached with them. But that's the recipe for euphoria, right? because people recognize that's what's going on, just like me as a trader, and we jump in on it when we see it. So big shout out. We're going to go through the progression, but big shout out to TJ, who's been in the chart guys for at least 5 years. Post this Monday, 10:29 a.m. I streamed on Monday from 9 a.m. to maybe 10:27 a.m. And I can remember I wrapped it up by saying, I don't really see anything that I like at this point. TJ posts this 2 minutes after I'm done streaming. 2 minutes later, I'm long BMNR. And I'll show you how I made my entry. But big shout out to TJ. I have no idea how TJ ended up doing on this play. He made money, I'm sure. But TJ might be kicking himself. Man, I was the one to post it. And it went up, 850% from when I posted it. And I could have made blah, blah, blah. That's not the mindset. For me, the goal is I want a higher net worth than the day before. And when you're trading with a community or a group, it is so much more fun to make money with other people. And this post alone had a ripple effect out into the world, impacting a significant amount of people that TJ's never met and doesn't know, and myself included, in the sense that I jumped on this post. And then eventually, after I post that I'm in and we talk in our chat room, then I posted on Twitter. And I've got messages from people on Twitter saying, I just sold at 150, up X 100% because you posted about it on Monday. I only posted about it because TJ posted about it. It's a ripple effect. And that's the most fun aspect of trading in the new digital age and social media and chat rooms and all that. So thanks, TJ. So how did I enter right after that? And there's a number of things that when I'm trading this style, number one, I don't care about rebuying higher than where I sold. That seems backwards. People normally, as a new trader, would say, I can't rebuy it 35. I sold it at 28. That's way higher. I should have done this. No, you're just limiting your opportunity. What's done is done. If there's a new setup and there's new information, you get in at a higher price. Another thing that I will do is, I've been doing more, is adding to positions. There's two ways that I will add to positions. I will add an EMA rider, so I'll add an EMA support, or if we've been trading sideways right under an all-time high resistance, I'll stop by the resistance break and add to that. The other thing is back burners. 1 minute oversold, looking for a 15-minute higher low or a 5-minute higher low, depending on what the setup is. Things like that are ways that I'll look for entries as well. The other key is that I keep going aggressive until I get a stop sign. What is the stop sign? A loss. So just today, for example, again, we're going to start on Monday, but today, for example, I probably had 20 different orders of this name today, buy, sell half kind of deal. And I was green. And then towards the end of the day, probably in the last half hour, I had my first red trade. And I gave back, let's say, 15% of my gains on the day. That means I'm done. I enter a mode where I say, I'm going to keep doing this. And then the first time that I lose or am wrong doing this, I stop doing it. Because that means the momentum is shifting. Maybe the top has been set. Because that's the other thing. It's a game of hot potato. We know that, I'm angelic. When the top is hit, we're going to pull back 40% in a couple of days at most. Very often, that's how we top out. And so it's a game of hot potato because you don't want to be holding when that 40% drop happens. You want to be out. And so that's what it was like for me in crypto 2017. And you have to be willing to accept that drawdown. Right now, the stock market's been going straight up for a week and a half. And I've been aggressively swinging long and trading long. And I know that when the market tops, I will see a drawdown in my accounts. But if I fear that drawdown, I'm limiting my opportunity and I'm missing, my account's gone straight up for the last 12 trading days in a row. And if I was worried about the drawdown after day 6 of that straight up move, I would have been limiting myself on 6 more days of follow through. And so in 2017 crypto, I had a goal, $25,000. I want to double this. And that's my goal for trading ETH. And that's how I entered the market. And then I blink and I'm up thousands of percent. And so my mindset was then, I'm going to keep doing this as long as it keeps working. When it stops or when I make a big mistake, I'm going to get back what to me would be a huge amount of money. But I will still be way over what my goal was. And so that's the kind of environment where I want to be smashing the gas and riding it as aggressively as I can. And I was doing the exact same trading in crypto 2017 as I did this week on BMNR. And back then, Bitcoin hits a new all-time high. You get followed through of 5 to 10% instantly. So you can all in buy those resistance breaks with the confidence knowing that, okay, I'm all in and I'll just sell a third of it 5% higher 5 minutes later. And then I'm in full control at that point. Sometimes you got to worry about halts and things with stocks. Fortunately, BMNR didn't have a ton of those recently. I think that's all I wanted to say. Okay, so Monday, how did I get in after the post from TJ? And again, keeping in mind at that point, it definitely is chasing to a certain degree, but as long as your risk parameters are set, you can chase. And so, in this instance, from the open on Monday, by the time I bought, we were already up 20 whatever percent on the day. Most stocks that I trade don't go up 20% on the day. And if they do, it's not going to go up much more than that. But this was different. It's got the 3 ingredients that I need for that euphoria. And so the entry that I made was just 1 minute EMA 12. So I see it's running crazy. I see, there's a lack of price history. And I entered, that Monday? Yeah, here's where I entered. So inside bar bear break, 1 minute consolidation, following through a bit, 1 minute EMA 12. Okay, I'm looking back at the price action. I see it held. We grinded it, but it held. All right, I'm going to play off 1 minute EMA 12. That's the most aggressive entry. What if I'm wrong? What if that's the top for the day? Okay, I'm in at, I think my fill was 1852. So I'm in at 1852, and I will just exit. If we drop down, whatever that at that size, yeah, we would need to drop, $1 for me to then cut it and say, oh, that's a decent loss on the day, and I'm done trading this name. So the dollar risk is my stop level because the only support I see is 1531. That's too far away. I'm not going to play off 1531. I'm playing off 1 minute EMA 12. And so we pull back to it. I'm in as this inside bar is forming because I see in the 1 minute EMA 12 hold initially. And then we get the big bull break. And I sell half fairly quickly. You look back in hindsight, again, as a trader, you can find 1,000 things to be mad at yourself about. I choose the opposite and find the 1,000 things to be glad with myself about. And so in this instance, I'm in at 1852. I'm out half at 1938. So that's a 4.5% move. That's not shabby. It's in, a minute or two. But as soon as I sell half, I now just stick a break-even stop and I let it go. And I let it run for a while. And, I can look at that and say, oh, if I didn't sell that half, I could have had this many dollars. That's a negative mindset. Or I could look at it and say, if I didn't sell half, I would have never been comfortable entering off 1 minute EMA 12 on a name that's already run 23% that doesn't have a support level in terms of price that's nearby. So I don't get one without the other. I have to sell that half to take that trading style if I'm going to enter aggressively. So I end up trading it a few times on Monday. I sold it all Monday after hours in like 41 was the exit of my last position. Hindsight, right? I could find a million things I did wrong. That one, I don't want to gloss over any mistakes. I want to improve. I want to optimize. I can learn from things, but again, it's just being very gentle with yourself and knowing that you're never going to nail tops and bottoms. You're never going to do the perfect thing. You're going to do your best as you can. Do you have a higher net worth than yesterday? Great, keep going. That's the goal. So then we got, big follow through on Tuesday, traded again on Tuesday. I didn't trade it on Wednesday, and it was a daily inside bar, and I thought we might be done for now. Tuesday's an ugly candle. Tuesday is, okay, we're done. One of the characteristics of a play like this is you close at the high of the day in blue sky, they push it in after hours easily. BMNR was up 50% after hours in an hour and a half on comparatively very low volume. And, that happened in Canadian cannabis when I was leveling up. That was the play. And then Tuesday, it looks to me, well, we might be done. We just ran in 2 days, hundreds of percent, 500% in 2 days. You tell me that's the top. What's the percentage chance that's the top after that daily candle? I'm at, 87%. That's the top. Then on Wednesday, we hold the low, 41.22. We hold it by 28 cents. That's impressive. Okay, bulls are still sticking with it here. We might not be done yet. We don't have the strong close. We don't have the gap runaway type of action. But then today, inside bar bull break, your first signal in is 63.58. Your second signal in is 74.80, the new all-time high. I missed the first signal. I bought today. Today my morning was I'm trying to long CRCL again. I get a position. I stop out break even. I long CLSK, crypto miner, trades around. I do a little flip in, stop out break even. I'm focusing on the crypto plays clearly. Bitcoin's right under all-time highs. We've got clearly crypto stocks have had relative strength for weeks. Then I go to BMNR. Okay, inside bar bull break, an all-time high is back in play. I am interested again. So I went from, nope, not this name, nope, not this name. I very easily could have just focused on Circle for the next hour where it did nothing but equilibrium and tighten up and missed a massive opportunity. I can't suggest enough getting the mindset of if you're not doing what I want you to do exactly as I want you to do it or close, I'm ditching you and I'm going to the thing that will, the next opportunity. And obviously we're in an environment where there's opportunities everywhere, more so than usual. But I'm looking at my orders over here. So first order of BMNR was at 959, 70.72 is my first fill. At that point in time, how much are we up on the day? A lot. I am chasing. And I know I'm chasing. From the open, 1029 I said, 70.72. So at that point in time, we're already up, again, 24% after running hundreds of percent. How am I comfortable buying here? Because I have a clear level nearby that's going to invalidate and stop me out and keep my risk small. Again, it's 1 minute. 1 minute EMA 12. It wasn't a perfect hold on the morning. This candle closed right under it, but it's like, well, we're right under all-time high. If we're going to get all-time high here, we're going to run on 1 minute EMA 12 again. I see this lower wick. I see the 1 minute higher low set. Now I have a level going off of. I'm playing off of 68.51. Give a little wiggle room. Stop 67.99. I'm playing off that level, and I'm entering on this 1 minute consolidation. So I'm filled 70.72, and I sell 1/3 of it at 72.75. Why? We haven't broken the all-time high yet. I know I'm being an aggressive bull. It's possible we reject and stay tightening up. And so by selling 1/3, now again, my break even, 772, easy math. 69.72 is my break even. So I stick my stop 67.99. I got 2/3 of the position left. I am still risking a loss, but it's a very acceptable loss if that were to hit. We then run, and I'm in full control. And then once we get to a period where it feels like a top is coming at any point, blow off top, I'll do something like, I'm going to exit when we lose 1 minute EMA 12. So I was all out this trade by this candle. And, I sold some more upper 70s. Yeah, I was pretty much upper 70s, low 80s, and then I'm all out. And so, okay, I'm being protective, right? I just give me a little bit more. If it keeps running, all right, I'll look for another spot. But again, I'm just, it was the same thing in 2017 crypto where I didn't, if I just bought Monday and held, would I have done better than trading? Absolutely. But if you told me on Monday, what's the percent chance that we're going to run 1,000% plus this week? I'd say less than 1% because that's the probability that this would happen. So I can't kick myself and play the what if game on a less than 1% chance because that's not realistic. Oh, what if I had picked those lottery numbers? I could have been a billionaire. No, you don't do that. So don't do it on such a low probability thing. Shoulda, woulda, coulda is a big waste of time. So, but I was playing hot potato with Bitcoin in 2017, Buying, selling into strength, getting stopped out of my runner, reload, even though it may be higher, but it's still strong. And then when the top is hit, I don't give anything back. Maybe I take my first loss on the account, but many times I'm right up near my all-time high. And same thing with today. I was BMNR from the high of 160 pulled back 25% or whatever from the high very quickly. And I hardly gave anything back because I'm playing hot potato and I'm not holding anything when that kind of top is set. So the next buy that I had was up in the 80s. 79.62. And I was selling it in the upper 80s. So 10, 11. That was probably me adding. So yeah, another really tight. Yeah, again, just an add, right? So I still have a runner position at that point. I add here because why? We're trading sideways. We have a very clear base of support that I can go off of here. Look at this hold. 77.51, 77.50, 77.51. Instantly, I know I'm playing off that level. There's clearly a bid there that is not allowing the price to go lower. And so I can buy it, I can market buy while that's once I recognize it, I market buy, I get filled at 79.64. It's not ideal. It's $2 away, but I just stick my stop 77.49. I'm risking, we'll call it $3 with bad slippage. And then I sell half of that at 83. So I wait, I'm playing on the sideways, bull break, out half 83. So now my added aggressive position, we'll just do easy numbers, 77.50 to 83. I sell half. What's my break even now there? 72.50. I'm coasting on a larger position now, and I just stick a break even stop. Every new position, I'm treating it like it's its own trade, break even stop on my added aggressive position. If I stop out, I still got a little bit from earlier, let that one run. But I did that so many times. When I'm going to do a stop buy, it's when you're trading sideways. So here was a temporary top. I thought the top could be in, but we're just looking for a 5-minute high or low. And so on this pullback, had a solid entry. Forget exactly what it was. 1-minute inverse head and shoulders. I anticipated a 5-minute lower high. I sold on the way up, sold 112s. I didn't think we were getting another leg up. Again, you asked me at that point in time, what is the probability that we're going to see a new all-time high before close? I say there's an 8%, 10% chance. 10% chance from that climax top and a halt on the way down, and you have now pulled back. And again, the shortened day, time's running out. You're down 26% from the high, which means you need 35% just to get back to that level. So again, it's not the most likely scenario for me. I thought we would tighten up for a while, and we just absolutely ripped again. And I was buying this thing the whole way up. I bought again 89. That was a stop buy. What was 89? I do a stop buy when it's an all-time high and you're trading sideways right under it. You're building up pressure. And a lot of people do that, the more you see a clear level. It was here. So here's the high. You're trading sideways. Look at 77.50 again. We're holding the 78s, the 79s. You're just trading sideways, and then we get close, and we're knocking on the door, and then it's a little more sideways right under resistance. Stop by at 89.01. I'm filled at 89.48. Great fill. Fidelity gives you great fills. I've been with them for a long time. Yeah, stop by 89.01. I'm filled at 89.48. Look how long I have to wait. That minute, I'm waiting seconds, and it's at 96. So I'm up 7% in seconds on that aggressive stop buy. Again, same deal. Sell a little bit, break even, stop. Run, run, run. I mean, I was buying in the 120s by the end of the day. 123.72. I bought at 12.26. So that was me recognizing, oh damn, we're gonna get a new high again. If you get that close, you're gonna get a new high. So again, pop above it, sell a bit, break even. You know the deal. I'm not sure exactly where the loss was that I took. Probably here. This 1 minute equilibrium. Big pullback, lower high, higher low, lower high. I probably positioned in here and played off of 147, 146.99. Stop out. Done with it. Out of time as well, but You get the idea. So I'm done talking just because my brain has now run out of things to say. This was longer than I thought it would be, but hopefully it was helpful. Do good things. All right, I'm back. I forgot to talk about what do we expect from here. So again, top at any moment, 40% pullback, pretty much guaranteed. Is the top in? I don't know. How many things this past week did I just talk about that I did not know would happen and still benefited from and were very low probability? So that's all I can do is try and get probabilities, but I have to fully accept I don't know. So it depends on how we open on Monday. We could open at 100. We could open at 140. I have no idea where we're going to open, but we know resistance is 161. I will be watching for a lower high compared to that level. We've got a base after hours right now in the 112s. So if we break 112, probabilities increase that a top is in. The big one will be when backburners stop working. We're going to look for 5-minute oversold to mark an hourly higher low. If that happens, and then the hourly bounce can't get to the highs, and then we confirm an hourly downtrend, top is in for now. It's the zoom out game. I just talked about the 1-minute EMA 12 rider a lot. When you lose it, zoom out to the 2-minute. Watch 2-minute EMA 12. When you lose it, zoom out to 5-minute, then 15-minute, then hourly. It's the same thing that you do with backburners. You use up the first 1-minute oversold, go to the 5-minute. First 5-minute oversold, 15. First 15-minute, then you go to the hourly. It's this zoom out game of the different time frames to capitalize on the different opportunities. I can play a bounce at 5-minute EMA 12, even if the top is in. Maybe I stop out break even. Maybe I lock in a small win. We confirm a 5-minute downtrend. Okay, didn't work. So now I'm going to the hourly. I'll look for the hourly higher low. I'll watch hourly EMA 12. I'll use the 5-minute time frame, nested trends to try and find that hourly higher low. And that's how it's endless opportunities when you get a runner like this. It just means, okay, take a step back and you look for the next time frame higher low. And then, or the lower high once we're confident the top is set, but I find it a lot easier to be on the long side. And what other supports? So where do we find support on the way up? This is a big level, 95.70. That's going to be key next week. Been eating a bunch of wine berries. Volunteers all around the yard. It's the best time of the year for flowers. Echinacea, coneflowers, gladiolus, different kinds of lilies. That's echinacea. Nope, that is elderberry, whose berries will be ready soonish. This is pokeberry I'm letting run wild. The birds eat those. Lamb's quarter taking over the asparagus bed. I've been eating more of that this year than usual. Beets and squash. You can see the squash took a beating from the hail with all these holes. The bigger the leaves, the more beat up they got. You can see this mullein beat up. Harvested a bunch of the onions. The ones that are left, I'll just let them flower. Peas got cooked in the heat wave, but bunnies live in there, so letting it be their shade. Cucumbers, squash, peppers, watermelon, tomatillo, a couple different kinds of bee balm. Sunflowers got pretty beat up. Squash, kale. Harvesting potatoes today. All these dying plants are the potatoes. You can see the onions in between them. I also planted beans, so the beans will hopefully take over now that the potato plants are out of the way. Let's do one. Treasure. Pretty decent year. I've had better, but didn't have to water much, so that was nice. Every now and again you get one that somebody's been eating so they can keep it. It's a good trade-off. They usually just eat one, leave me the majority. Alright, I need 2 hands.